Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Justin Nielsen here with a look at the action in today's session, Monday, July 24th. And we saw modest gains across the board ahead of what could be some big fireworks this week, Justin. We've got the Fed, we've got a bunch of big earnings reports, but at the very least, more volatility, I think, perhaps could be expected as the week unfolds. What say you?
Absolutely. Well, the big news is that you and I are both in the office sitting right across from each other, something that hasn't happened in probably a couple years. Yes, exactly. High fives. But yeah, a bunch of earnings coming up. I mean, you've got the big magnificent seven members like Microsoft, Google, Apple, and Meta. You've also got some of those industrials like GE, Boeing, all of those. But today we're going to talk about DraftKings, Halliburton, and O'Reilly.
Let's do it. First, let's analyze the major indexes. The Nasdaq up 0.2% today. The Russell up 0.3. S&P 500 up 0.4, and the Dow up 0.5. Look at that, 1, 2, 3, 4, 5, right there with the indexes today. But what do you make of where the Nasdaq is? It looks like we're right around round number and holding up nicely, even though perhaps a little bit of increased distribution, Justin.
Yeah. So, I mean, last week it was one of those things that you have to be a little bit careful when you start seeing distribution clusters. And what I mean by that is we had a distribution day, technically a stalling day, what we call a stalling day on Wednesday, then a pretty significant distribution day on Thursday, followed by another distribution day, although not quite as bad on Friday. So, all of those days, increasing volume with, stalling action to start and then followed by distribution with some selling. But what I will say is there still seems to be a little bit of a hesitancy for the Nasdaq to give up gains. So after that big distribution day on Thursday, it really kind of didn't make much more selling pressure. And I like that we're staying right above that 14,000 round number that you mentioned, Ali.
Exactly. So, just as you've said, Justin, in the past, not all stalling is created equal. Not all
Right.
distribution days are created equal. So, not all
True.
clustering is created equal if
Right.
the
Exactly.
if the logic goes there.
Yeah.
So, in terms of this current clustering versus other clustering that you've seen maybe at market tops, where does this rank in terms of how concerned should we really be? Some somewhat concerned, some sort of caution, but is this really like the red flags of, the beginning of the end kind of thing here?
Well, I always think of clustering as, like the same thing when a deer is out in the forest and hears like a twig snap. It's got to immediately kind of like take a second and say, "Hey, is that something serious or is that just like the wind?" That's where I am right now. What I'm waiting for to see do things get worse, and look, I did a little bit of selling last week, whether that was some profit taking and some stocks that, hey, they just weren't working, so I'm going to trim those. But it doesn't mean that I have to sell everything, and it certainly doesn't mean I have to make a significant amount of changes to my portfolio. But it is something that I start thinking a little bit harder about. Where am I going to want to get out? Where am I going to want to take profits?
Right.
What happens if this gets worse? What am I going to do? So really just making sure I have that plan solid in my
Yeah.
mind to execute.
Yeah, exactly. And making those decisions as the evidence presents itself. Really like that. Let's take a look at the S&P 500 now, Justin. I mean, this looks just a quiet, calm
Right.
uptrend.
Yeah. Nothing much to see here. It's just holding above, we talked about that 4,500 level on the S&P 500. And if you look at the weekly chart, remember this 4,500 level is something that kind of goes a ways back in terms of being an area of importance. So the fact that we're staying above this 4,500 level, I'd like to see us make a little bit more progress. But if we pause a little bit here, I'm okay with that too. It's building that platform that I like to see from which you can launch from. And so if it does that, hey, that's a win as well.
Great. Let's take a look at the Dow. Are we going to see a repeat of last October with the Dow now being the leading index? I mean, look at this winning streak here.
Yeah, and you see that relative strength line kind of coming back to life. It's got a ways to go to get back to previous highs, but it's certainly worth noting the strength in the Dow. Now, keep in mind, look, 30 stocks here,
Yeah.
and sometimes you can have a few stocks that really just make the whole thing look much better than it otherwise would. In the same way that the Magnificent Seven has been all the talk about the Nasdaq Composite and the Nasdaq 100. So today look, you had Chevron and JP Morgan helping with the Dow,
Mhm.
and each day it seems like there's something else that's kind of been helping the Dow power higher. So it's good to see it participating. When it wasn't doing much,
Right.
at least in my mind, what was good is it also wasn't doing anything bad. It was just
Right.
kind of holding there. So as long, now that we're actually getting a little bit more strength here, I think that just speaks to the more broadening of this rally, and that's a good thing.
Exactly. And I mean, there's a reason why we look at all these different indexes every day because look at how quickly things can change. Oh, well, the Dow's a laggard, the Dow's a laggard. And then, last couple of weeks really turning it up. Let's now take a look at the Russell 2000 small caps also participating more and more in recent weeks.
Yeah, and so I think we're approaching that 2000 level. That is going to be an area of interest. Again, if you go to the weekly chart there, you can kind of see how going back a ways, that 2000 level has been an area of importance. So that's kind of what I'm looking at right now,
Yeah.
as the next hurdle. Can it get above that? That's going to give some extra confirmation. And look, we talked about this on iBuddy Live this morning. A lot of the financials were doing much better last week. And so you had a lot of the regional banks participating.
Yeah.
There are a lot of regional banks in the Russell 2000. So, KRE coming back to life, Charles Schwab, which was, was a big concern, like what's happening here,
Yeah.
that really sprang to life. So I think that there's a little bit of the banking sector that's coming back, and XLF is maybe another thing that we can look at there. The financials just again showing a lot more strength, getting back above that 200-day line, whereas they really got hammered pretty hard in March. So at
Right.
least coming back to a degree.
Exactly. Yeah. And even if these aren't the leaders, leading stocks in the leading groups, like you said, it speaks to the breadth. It's great. We want these groups participating,
Mm.
and that they are right now. Let's now take a look at another signal of market breadth, and that is the equal weighted NASDAQ 100 ETF QQEW. But before that, I'm going to look at QQQ, the NASDAQ 100. It could be a big week for the NASDAQ 100, Justin, with all of those big tech
Yeah.
earnings that you mentioned. So, what are your thoughts on what we're seeing here with QQQ versus QQEW, both in strong uptrends?
Yeah, so at the advancers on and the decliners were about evenly matched, about 2100 advancers versus 2300 decliners. So it's no big surprise that QQEW, the equal weighted, was a little bit harder hit. But again, you're not seeing big movements here, and it's not a big disconnect like what we were seeing before.
Right.
Same thing with RSP and SP 500. Not a big disconnect there. It was lower on the
Mhm.
RSP, but not significantly so. So again, as long as we don't see the big divergence here that we were seeing earlier this year,
Mhm.
I'm okay with there being small divergences. You can't expect things to go in lockstep all the
Right.
time, but having very little variance is not something that's going to bother me that much.
Mhm. And let's take a look at the 10-year Treasury yields reversing higher by a little bit here today, closing around 3.857 or so. And we're going to have the Fed later this
Right.
week. What potential impact do you think that could have, Justin? Or
Well,
is it baked in?
I mean, I would think that it's baked in. I mean, this has been expected for months, by the futures market. So I think a quarter, rate hike is not something that should be a surprise to anyone. But as always, it's not really what happens. It's about some of the language that's surrounding it.
Yes.
What happens at the press conference? How does Jerome Powell answer those questions? And look, there's going to be a while before we have another Fed meeting until September. But Jackson Hole is going to be in August, so we are going to be getting kind of a firmer and firmer picture of what the end of this year looks like. Because for a while there, remember, it wasn't too long ago that there was the expectation for cuts at
Yeah.
the end of this year, and that kind of went away and has been a little bit back and forth. So I think getting more clarity as we get closer to the end of the year here is going to be important for a lot of investors. But that being said, I think it's worth noting that the 10-year Treasury yield did come down to the 50-day moving average line and is bouncing from that. So it'll be interesting to see. Look, we got above that 4%, got quickly
Mhm.
turned away on the yield, and back down. It'll be interesting to see how this pans out over the next few days, especially after that Fed meeting.
Yes, that it will. Okay, I'm just going to run through some ETFs here real quick, Justin, then we'll get to those three stocks. So here's a look at SMH. Chips, of course, still very much a sector of focus for us. Up a little bit today, just a little squeak higher, but hanging right around that 21-day moving
That's what I
average.
like to see.
And that's what we like to see. And here's a look at IGB, which tracks the software sector. It's right around its 10-day line, so not even down to the 21-day.
Yeah, exactly. Again, this is what's really leading a lot of the tech, and the fact that these are still looking strong, not looking broken, I think is, when you got your leading sectors still holding up well, that's a positive sign.
Yes, it is. What about industrials here? Up about 0.25%, continuing a very steady uptrend.
Yeah. So what I just wanted to kind of focus on here is you're again getting that breadth outside of tech. So XLI looks pretty good. I mean, it had this breakout, just a few weeks ago, and it's continuing higher. You also have XLF, which is coming back to life. So that's good to see. It still has a ways to go to get to prior highs, but it's looking much better. And XLE, that's also coming back. And in fact, XLE was one of the things that was making the Dow look a little bit positive today, and the S&P 500 outperformed the Nasdaq today, as you had Chevron, which helped that a lot. And by the way, it's also worth mentioning that both Chevron and ExxonMobil have
Mhm.
earnings this week, so those are among those that you have to watch. Also on the financials, like the industrials, that's been moving higher. We got Visa and Mastercard coming out with earnings this week, so a lot of things to be watching. Going forward.
Yes, and IBD has you covered every step of the way to help you filter through that noise and focus on what matters to you as an individual investor. With our growth focus, active investing, looking at outperforming the market, actively trading. I think I probably said that, but there's a lot to focus on, and we are going to be covering it every step of the way. Let's take a look at DKNG, Justin. This is DraftKings working on a third potential week of tight action here after a nice move up almost 15% a couple
Yeah.
weeks ago.
Yeah. So again, I love this look where you get a strong move on the weekly chart and it just holds those gains. It says, "Hey, look, I'm comfortable with this higher valuation. I'm okay with it." And yeah, that's a positive. And as you mentioned, we're kind of right there at that 3 weeks tight. So if we can hold tight here for the
Mhm.
rest of this week, guess what's coming up? Earnings next week. So we've got earnings coming up on, let's see, August 3rd after the close. So yeah, this is a stock I do own, by the way, in my own personal account. But I would also suggest that folks take a look at the stock of the day that was written by Harrison Miller today, because it kind of gives you an idea of, hey, what's going on the fundamental side for this. A lot of people might say, why would you be owning something like this? This has no earnings, but this is kind of an industry play. There's a
Mhm.
lot of strength in the leisure gaming equipment, the casinos, what have you. So sports betting is becoming more legal, legalized in more
Yeah,
states, and that is helping drive some of the growth story here. So
right.
definitely worth a read. Harrison's article.
Yeah, and strong top line growth. It's moving towards profitability there. And Justin, one more note on this weekly chart here. What if we don't get a third week of tight action? What if it clears these recent highs? Would that look like a potential short stroke entry?
Yeah, I mean it's one of those things that I'd prefer for it to wait. But
Wait
look,
till after
stocks.
those earnings.
Yeah, wait until after those earnings.
Please.
Because I could see myself adding to this position, on the earnings, because, and again, what I would do is I would add a smaller amount, right? Because I don't want to
Mhm.
drive my average cost up too much. I've got that nice gain from a few weeks ago that I want to hold the bulk of. But yeah, adding a few shares, maybe even 10% of what you have isn't going to move the needle too much on your average cost. So that's what I'd like to see. But again, you
Yeah.
got to kind of go with what the stocks do, not what you hope they do.
Mhm. Well, that tight action after that strong move, very, very notable, and with that kind of volume profile too. Let's take a look at Halliburton oil and gas field services. We looked at XLE. So energy is starting to come back to life here, including HAL, up 3.6% today.
And last week, you and I went over SLB, but yeah, Halliburton is kind of in that same area. And if you go to the weekly chart on this one, you can kind of see that you've got this, nice big cup with handle, a depth of 40%, a handle of 36%. So a little bit looser than what
Yeah.
we'd like to normally see. But we are kind of tightening up here. And, I could kind of see doing an early entry, right here at around 38 and a half or so. And think of what that could do for you. If it doesn't work, you're going to know pretty soon, if like it crosses below the 21-day moving average line. So you're not risking that much. But if it does work, by the time it gets up to that 43, 42 entry, the traditional entry, you're going to have a 10% cushion on this. So that
Right.
can really help, if it kind of wiggles around in that area, to have that cushion ahead of time. Another thing, this has earnings behind it already, so you don't have to worry
Right.
about that coming up. And it's in an area that is, looks like it's moving. I mean, if you
Mhm.
look at OIH, which this is kind of a member of, along with SLB, the OIH ETF, that's up there. So you might say Halliburton's lagging a little bit because it's not at those highs, but it still is offering a potential entry, and something that could potentially catch up.
Great. And last but not least, let's take a look at ORLY. This is O'Reilly Automotive. Some nice tight action here too, right around a resistance level.
Yeah, so earnings coming up on this one, on July 26th after the close. So that's Wednesday. So you're going to have the Fed, and then, O'Reilly also kind of around the same time. But yeah, a nice little area here at 964.58, right around that previous high. It's allowed the moving average lines to catch up with it. It's right there at its 21-day moving average line. But go to the weekly chart, and one of the things you look at here is it's just had this nice steady move, and more importantly, that EPS growth rate, pretty robust at 23%. This is an annual growth rate. So, I mean, imagine if you were growing your salary 23% each year. That can add up to quite a bit, especially over a 3-year or 5-year time
Oh,
frame,
yeah.
which this is doing. And on top of that, it's got an earning stability of 5. Now, this is a number from 1 to 99. The lower the number, the more stable those earnings is. And O'Reilly has a habit of putting in stable earnings. So then if you take one more step back to that monthly chart, you can see that this has like long, this long period of growth that it's had. And this the stable earnings really helps that. And that's why this has been on our long-term leaders before. It did come off because, look, it's not enough to have stable earnings growth and strong, robust growth. You also have to have the stock price performing as well. And there was a while there where the stock price just wasn't performing relative to the market, but it looks like we're kind of back into that outperformance versus the market. And so O'Reilly is something that we're going to be looking at for adding back to our long-term leaders. We generally like to buy those on pullbacks, so this is probably something that'll go on the watch list first.
Yes, we like it close to that 50-day line. All right, we'll have to see what the earnings report is like very soon. We will get those numbers. Thanks so much, Justin. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.